This video's title refers to the fact that we will be responding to a crucial question. I hesitate to call it a question, but it is nonetheless important. Will Bitcoin's value drop? There are indicators that can give some insight on what will happen to Bitcoin in the coming days. You would know if you're familiar with reading charts and crypto market data. This video will feature 3 particular things that will definitely help investors become more equipped in planning out their future investments in crypto. Now, the first chart we're going to be looking at is the most pressing one because it is very much important for the next 24 hours. In fact, when this video comes out, it will probably be already past another day or so. All of these indicators are equally important, but the first one is the most pressing since it's telling of what will happen in the next coming months. Before we continue, a brief request from us. If you find value in these sorts of videos, please don't forget to subscribe and hit the notification bell so that you don't miss our valuable crypto content in the future. Now off to the first indicator. The 200-week simple moving average, or 200-week SMA, is a moving average that is represented by this green line. It has identified the macro bottom of every single bear market in Bitcoin history based on weekly candles. 2015, for instance, marked the bottom. This was followed by 2018 and then 2020. As of right now, it's uncertain whether or not 2020 will be the bottom because we actually closed a weekly candle just below it. The fact that we effectively have 24 hours here, or whatever time frame is close to 24 hours, cannot be overstated. After all, not only does this signal the macro bottom for Bitcoin on 3 different occasions, but it also denotes a 10-month consolidation period in 2015. The strength of this moving average for 200 cannot be understated in the slightest because it is the single strongest moving average we have on Bitcoin in terms of a support zone. It marked a 4-month consolidation period in 2018 and a 1-month consolidation period during the peak volatility in which Bitcoin dropped by 50 in one single daily candle. It will be very interesting to see what happens over the next 24 hours. To secure a closed buffer 200-week SMA labeling this drop of fakeout, you'll need to get back above 22.4 thousand. The hourly chart is also quite interesting because obviously, if we're looking at a shorter term time period like 22 hours until the weekly candle closes, we need to be looking at the hourly chart and seeing what really happened. Basically, what we need to do in the older chart is get to and above 22.4 thousand within the next 22 hours in order to secure our weekly candle close. This is where it really starts to get exhausting from an analysis perspective. You might assume that because we broke the pink triangle to the upside, which is unusual for a pennant formation, it was a bearish formation that we would easily return to. However, since the breakout complicated things significantly, we now have an actual ascending channel formation. It could also be as a descending wedge formation depending on the time frame, but I'm going to say that it is an ascending channel formation because it is also bearish. There is therefore a very high probability that Bitcoin is unable to return above the 22.4 thousand region, and as a result, it is unable to return above before the weekly candle close here. Regardless whatever my guess is, it's just 22 hours away, so I believe we should wait and see what happens. Consequently, you should focus your attention on that first. If it does, this recent drop below it will be labeled as a fakeout, and the likelihood of Bitcoin bottoming out on the turnaround SMA as it usually does will return. However, if we don't get back above it in the next 22 hours and we close another weekly candle below it, that will only serve to further solidify the fact that this is a very strong resistance. Now, some weak smear would have changed from a very strong support to a very strong resistance, and it would have strengthened the bearish argument a little bit more. If you guys don't already know, I think it's more likely that Bitcoin will go even lower here. I don't personally believe the bottom is in, but I do respect the idea. I still respect the possibility that there could be something like this, a macro uptrending line for Bitcoin. That would actually suggest something about what I'm thinking will happen to Bitcoin, but if I had to guess, I'd say that this uptrending line would be broken. Naturally, if Bitcoin holds this line extensively for a long period of time, it's not illogical to see dead cap bounces on lines that you will go on to break them to the downside. However, if Bitcoin holds this line and bounces up and breaks above critical resistance, like zooming out here to 28.6 or even 33,000, it's not illogical to see dead cap bounces on lines that you will further go on to break them to the upside. If we zoom out to the one-day chart, we can see that the red box represents the crucial resistance area. If Bitcoin holds that macro line that we're looking at here and breaks above that resistance, then we can start to wonder if it actually did signal the bottom of this bear market as it did in previous bear markets. Nevertheless, it is a line we need to be watching because it has marked the macro bottom just like the tournament SMA in both the previous bear markets. It didn't mark the macro bottom in 2018. However, we do need to just watch it and understand that given the macro situation, there is a possibility, in my opinion, that it will be breaking the downside. This is a very valid line that needs to be watched. If we drop below it, obviously that is confirmation that we're heading to a lower support zone on Bitcoin, like 14,000 or 12,000. Right now, we have no reason to believe it's anything but valid because we've both seen a strong wick and a strong bounce off of it. Who knows? But if we hold above it and if we break over, say, 28.6 thousand while holding this line, it might be a sign that the bear market bottom has been established and that we're transitioning from a dead bounce to an actual possible resumption of some sort of bullish trend. But the reality is that for Bitcoin, the 20-week SMA over the next 22 hours is the most crucial indicator to keep an eye on, followed by this macro line over a long period of time. In my opinion, the Bitcoin dominance chart, which is the third most crucial indicator, is something that we should also keep an eye on. Before we go into detail, some people would ask, why do we need to watch the Bitcoin dominance chart? Well, the Bitcoin dominance chart is a graph that compares the strength of Bitcoin to other cryptocurrencies. As you can see in the current data on the screen, it currently stands at 43.37, which means that 43.3 of the total amount of cryptocurrency is represented by Bitcoin. So you can get a good idea of how the market is trending in terms of altcoin strength in relation to Bitcoin strength. And by investigating it a little bit, you can eventually understand this. What generally happens is that after a bull market, altcoins have the biggest return on investment because everyone was investing into them when the Bitcoin dominance chart was in a severe downward trend. In a bull market, everyone becomes overly excited and just throws their money at altcoins rather than making logical investments into something like Bitcoin. As a result, you get a massive wave of FOMO and a bull market top because everyone is throwing their money at altcoins. Obviously, when the market tops out, things reverse and people don't want to be in that position. As a result, people become a little nervous and switch from investing in altcoins, which have very high returns on investment but also very high risk, to something a little safer such as Bitcoin, which has a lower return on investment but a lower risk. You can observe an increase in the value of Bitcoin in terms of the total amount of money invested in cryptocurrencies. People are essentially flocking into Bitcoin during bear markets to save their capital. So they are going from altcoins, selling these because their value is dropping, and flocking into Bitcoin for safety. As the strength of altcoins in terms of total dollars in cryptocurrency decreases, the Bitcoin dominance chart rises as the percentage of wealth in Bitcoin increase. We would anticipate the same thing to be happening right now. Instead, we're actually seeing something a little bit strange, and this is something that I don't necessarily have an answer to. In 2018, we saw massive increases in Bitcoin dominance all the way up from 35% to a peak of around 74%, doubling in Bitcoin dominance valuation throughout the bull market up until the bear market. Yes, it is moving upwards and has broken out of the triangle formation, which was actually a descending wedge formation that broke out to the upside. However, as a result of a strange intense volatility-inducing stroke, we have seen this actual fall back into the wedge formation and fall back to the downside. We should realistically be seeing this thing go upwards instead of downwards, which represents the fact that perhaps people aren't flocking into Bitcoin at the same rate as what they did in the last bear market. This could be due to the fact that Bitcoin is seeing insufficient demand. However, if we're going off the trend, if we're going off logic, what I just explained in which people flock into Bitcoin during the bear market for safety, we should realistically be seeing this thing go upwards. So if we're looking at, say, Bitcoin, we return to the Bitstamp chart for illustration, and I'm just going to delete every indicator I have to get a clean, fresh slate. So what I think is happening is that Bitcoin in the last bear market in 2018 dropped downwards. However, eventually, it went sideways for a very long time. In fact, the price was the same on the low in February 2018 as it was in November 2018. That's 9 months of just sideways price movement. During that time, people would have formed the opinion that Bitcoin is relatively safe. It's not falling like every single altcoin was. And Bitcoin is ultimately a more secure place to keep your money. The current scenario may be explained by the fact that unlike in 2018 when we witnessed a bullish trend, this time is completely different. Instead of witnessing a sideways consolidation during which everyone was persuaded that Bitcoin was secure, we now see a bullish trend. Altcoins are generally risky, but what we're actually seeing is Bitcoin dropping significantly alongside altcoins, so we're not getting that same narrative. People aren't feeling that way like they did in 2018. They're not thinking, oh yeah, Bitcoin's going to drop less, so I'll put money in Bitcoin. They're thinking, okay, that's dropping significantly. This is dropping significantly as well. Oh dear. Now, what happens is that I know I said at the beginning that I don't have an explanation for this. This might be the explanation to why we're not seeing the sideways price action that we saw in 2018 of 9 months. So what does this all mean? Well, other than the fact that unlike in 2018, Bitcoin is not currently the safe haven for cryptocurrencies. It's intriguing to think about that, and for that reason, I think it's worth keeping an eye on. Interestingly enough, if you just know how to look at the chart and how they move, generally you'll have a sense of what will happen in the market. Anyway, thanks for watching, folks. I hope you enjoyed this particular video. Also, be reminded that this video is primarily for information only, and we do not claim to provide financial advice that is set in stone. Be reminded to always do your own independent market research. Additionally, please leave a like, subscribe, and click the bell button to receive information on new crypto content related videos. Anyway, see you later, good luck out there, and thank you for watching!